So another myth that I would like to discuss is the idea that you need to be wealthy in order to get started with investing. I think that historically this might have been true. However, in present day, with all of the different brokerage firms where you can open an account for free, get started for free, where there's little to no fees, it has become increasingly more accessible, especially with applications that you can use on your phone or computer. Hello, and welcome to another episode of the Is It in the Budget podcast. My name is Obioha Okereke. I go by Obi, and I am the creator of College Money Habits. If it's your first time listening to this podcast, it is a podcast where we talk about financial literacy and financial education with the hopes of giving individuals like yourself the confidence to make financial decisions. Today, I am joined by a special guest and an old friend from college, Mallory.
Hi, everyone. I'm Mallory.
And today we're going to be talking about investing and more specifically, the importance of women investing. This is not the first time I've talked about investing on this podcast. This is, I think, the third episode where investing has been a topic. The first one was on the difference between investing and gambling and that, I guess, debate. And then I think an episode or 2 episodes ago, I had a conversation with a wealth advisor where we talked about investing and touched on some investing myths as well. But hoping for a open and transparent conversation today about the importance of investing and some investing myths and misconceptions that prevent people from getting started. Before we jump in, do you mind introducing yourself and sharing more about your story and what brings you here today, I suppose?
Thank you, Obi. I grew up locally and went to UW, and the industry that I work in, does have some influence with investing and just knowing your worth and things like that. And this is something that I'm also very passionate about, and I've talked to Obi about over the years. And so I'm here today because I think we all need representation in this space, and I'm happy to be that voice because I'm very passionate about it and research it.
Awesome. Thank you. And do you personally invest? I'm assuming you do.
I do. Yep. I dabble. Yeah.
And what age did you start investing?
I would say I started when I got my first job.
Okay.
So I was 22. Yeah.
Okay.
Yep.
Nice. How would you define investing or what it means to invest? Specifically, we're talking about the stock market. So what does it mean to invest in the stock market to you?
To me, it means creating ownership of an asset with the intention of it to grow.
Right.
And so it's not just about the dollars, it's about building the opportunities for yourself.
I guess with that, what do you think the importance of investing is? Because I think I was reading, 61% of Americans invest. However, when you look based on gender, I think it was 73% or so of men invest. Yep. And then about, depending on where you look, like 60 to 68% of women invest. And so, of course, it's a lower number there. But when it comes to the importance of investing and why people should invest, what would you say? Yeah,
so I like that you bring up those statistics because they are quite alarming. I even hear some where it's 48% of women and 66% of men. Mm-hmm. There's still that gap. Right. And I think it's important because, we work in our 9-to-5s, right? That pays the bills. That's a short-term gratification or resource for us. But I think it's our responsibility to take the time outside of that 9-to-5 to build something for our future and our ability to experience life, see the world, create a generational wealth for our kids, right? Or if we choose to have kids. So I think it allows us to live life the best that we can.
Yeah, and I completely agree because I know that, so I started investing when I was 18 before graduating from high school. I can say without a doubt that it is, if not the greatest decision that I've ever made financially, it's one of the best decisions because of the financial autonomy and financial independence that it can grant you in the long term. Yeah. Because I know that sometimes investing as a whole, because I think historically investing has been this really complex thing where it's like, oh, how do I even get started? And I need someone to do it for me. And that's just not the case. So now that we've addressed the importance of investing and why it's important to get started, and it's also been discussed in previous episodes, if you were speaking to someone of any age, because of course the listeners of this podcast range in age from, I think it was like 18 really to in the 60s, what would you say to them to try to encourage them to get started with investing? And where would you suggest people get started, whether it's with educating themselves or questions that they should ask themselves? Yeah. What do you think is ground zero?
Yeah. Well, first of all, you say you're speaking to your listeners. Them listening to you in general is a great first step, right? A lot of resources that I share with my sister are publicly available. Like, for instance, I know NASDAQ posts a glossary of terms for everybody to learn, like the basics, like the ABCs of investing. That's a great place to start because there's so many different words that you have no idea what they are, and they're very critical for deciding what's best for you, right? YouTube is a great resource for seeking out other perspectives as well.
Awesome. I know that. Have you ever used Investopedia?
Sometimes, yeah. I've visited the page. Yeah.
Okay.
Yeah.
That's one site that I've used like growing up.
Yep.
I think it's really helped me with how I started to invest.
Yeah.
But I like the idea of a glossary of investing terms.
Yeah. No, I think you could even implement your own if you wanted to.
So. Oh yeah, fair enough.
Yeah.
So when it comes to investing, again, we've talked about that there's a disparity when it comes to gender and the difference between men and women investing. When talking about women investing, and of course this statistic of mid 60%, like 65, it depends on where you look again, 60 to 68% of women are investing. When we talk about women investing, I think we need to make sure that we talk about all women and recognize that those numbers are lower when you start to look at Black women and Hispanic women as well. Yeah. And while there has been a significant improvement across the board of women investing, Black and Hispanic women are still investing at much lower rates than white women. And so when it comes to this access to wealth and securing financial security over the long term, I know that there's many reasons for why this disparity and then this additional disparity exists, but what are your thoughts on this? And how do you think that women can help increase, I guess, these, or well, not just women help increase these, but how do you think that these stats can be improved even further?
Bring those numbers up, right?
Yeah.
I think what we're doing today is a great example. It's representation, bringing in the people that you know from different backgrounds and communities and having them at this table and having these conversations. Right. I think that's just like the biggest stepping stone for this too. Talking about this with our friends as well, right? It doesn't have to be in a podcast setting, but having these conversations, like now that we're adults, like even out at a happy hour or something too, I think is really monumental and actually very impactful because some people are too scared to bring up these topics, or if their friend does bring it up, they're silent. Like you notice the people who are silent during a conversation, that's because they don't know what to say in the conversation. So it's things like that.
Yeah. And I read that when it comes to, because one thing that I always talk about is, especially for parents, is talking to your children about money. And I know that there can be some level of insecurity where I know like some parents or even just some individuals feel like they don't know enough to contribute to a conversation. Yeah. But everybody has interacted with money one way or another. And so whether it's been successfully or it's been a mistake, others can still learn from that. And so I do think that it's really important for parents, whether you're investing or not investing, whether or not you have a credit card or not or whatever, to from an early age begin to speak to your kids about money, because I did read that when it comes to women specifically, that I think it's only 15% of women, I think this was a poll by Charles Schwab, only 15% of women reported speaking about money growing up, which is a very low statistic. It's about half of what men reported. And so I think that's also one way that I suppose can help with filling in that gap.
Yeah. I will say I was fortunate enough to have parents that did talk about those things early on. We had chores. I had to make money by mowing the lawn at 11 years old, like just things like that. Yeah. So it's building also like the value of a dollar too, because it's also our own accountability, knowing how to budget, not overspend, to create that possibility of having that extra cash to invest. So it's the knowledge piece and the responsibility piece as well.
Yes, I'm glad you brought up accountability, because I do think that is something that can be kind of touchy when it comes to building your own financial foundations. And so when it comes to taking accountability, because I know in just the previous episode, Ephraim and I, we talked about like taking control of your own life. I think that has many overlaps with investing and just with finance in general. And so when it comes to this accountability and taking control, you talked about resources already, but what do you think are some other ways, like right now, that people can use to educate themselves about investing, or even, I guess, talking about like how you got started with investing? Because I think that might be helpful to paint a picture about what it might look like with getting started. You
know, when I first started out, from my personal experience, my first investment was my 401k. And seeing a little sliver of your paycheck every pay period, get removed and put into that, it kind of sucks at first. But once you start building in that habit, you don't even feel it anymore. So that first period of that ouch is, I think, a form of accountability. and then it just becomes habitual. For me, starting out, that was like my first experience with that. And then I think budgeting too.
Yeah.
Budgeting is huge, which I know you've talked about all the time as well. And you have really good infographics about that because people need to visualize what's coming in and what can go out too. So
a moment ago, Lauren mentioned 401ks. And if you are unfamiliar with what a 401k is, that is a retirement plan, a employer-sponsored retirement plan, which allows you to essentially contribute pre-tax income to an account where you can then invest towards your retirement. Now, the primary advantage of a 401k is that oftentimes employers will offer you a match. It'll range. Oftentimes it might be anywhere from like 1% to 4%, where up to a certain amount of your contributions, they will match that to a degree. And I can say personally that a match has been very helpful with my investing through my job, just because it is free money. Basically, for the money you invest, they'll also invest money into your account. And if it sounds too good to be true, it isn't. And so that's one of the greatest ways to go about getting started. Of course, depending on what industry you work in, you might not have a 401k. There's also 403bs if you are, I believe, in education and then in the public sector. But there are other accounts available. But if you don't have one of those and you don't know if your employer offers one of those, ask. And for the percentage that your employer matches, that's going to be a percent of your salary that they'll match up to a degree. So it's not going to be, depending on how much you contribute, it could be a large amount or it could be a small amount. I suppose that is relative. So let's talk about why people don't invest. Mm-hmm. So I was reading and I was looking specifically at women. Of course, I do think that this applies to a lot of people just in a general sense. But I know that the most popular reason for people not investing is a fear of losing money. Mm-hmm. And in addition to that, there's also a lack of knowledge or a perception that there is a lack of knowledge. And then feeling that you need a certain amount of money to get started. But when we think about this predominant idea that you're going to lose money in the market as a reason to not invest, what would you say to that?
Yeah, so, a lot of us are very risk adverse with everything in life. And the only way you get over that fear is just by diving into it slowly and just keep doing it over time, right? It's kind of like building a skill. Like if we're afraid to try something new, we do it anyway. And I think that fear of losing money, we have a lot of different ways to invest now, like different types of ways that things are managed and such. And so there's ways to diversify what you're going into, which can help eliminate a lot of risk as well.
The predominant reason people do not invest is this fear of losing money. Mm-hmm. I talked about it in a previous episode. It's inevitable that you're going to lose money when you invest. Yeah. To what degree is going to depend probably on your strategy and the emotions involved with investing. But what would you say to those people or to women who haven't invested because they fear that they might lose money? I guess as I asked that, think about your own experiences with investing or stories that you've heard or read about how people tackled that and battled through it.
Yeah. So I just want to say, it's very normal to have this fear, right? We all naturally are very risk adverse. Personally, from my experience, I minimize the risks that I am comfortable with by investing in more diversified products, mutual funds or ETFs, because it's not my job to manage a strategy. I don't have the time to stock pick, right. Which is probably like the riskiest thing you can do. So that's one way to do it too.
I also invest in mutual funds and ETFs. A large portion of my portfolio is individual stocks. I do the individual picking, but that's just due to strategy, where I know that like if you're starting out investing and your concern is losing money, I think the big ask is ask yourself to think long term, because I think that there's this misconception that investing, people are expecting to make money right away. Mm-hmm. The core of investing is to build wealth over time. So be thinking about like 10 years in advance or 20 years in advance or 50 years, or maybe you're not even going to touch the money. You're just going to give it to other generations, but not what's going to happen in a month or what's going to happen in the next 2 months. Because I have lost tens of thousands of dollars investing. However, we won't go into like unrealized versus realized earnings, but a lot of that money, I made it back just by relaxing and letting time ride out. Because, for example, one of the I think I can say this, but I think I've said it before. One of my holdings is Microsoft, one of my favorite companies to
We all
invest
know
in.
it's one of your favorites. Yeah.
And there's been periods of time where I have lost money off of that investment. Do I care? No, because what happens in a day doesn't really matter. And because you might lose 1% or you might lose 5% over the course of a week, but over the course of 10 years, you might be up 100%. And I think once you start to look at investing as a long-term effort or a long-term wealth building strategy, the fear of losing money slowly ebbs away. I mean, the fear is always going to exist because especially the more you have tied to the market, the worse it'll be if things go left, which is something that I've battled as well. But if you stay consistent, you are going to see rewards from it, because I started at 18 with $150. As of today, and this is not me boasting, but more emphasizing the importance of starting early and also remaining consistent, my portfolio is worth over $200,000. And it has granted me the ability to do so much and not be as concerned with like market fluctuations or not being as dependent on my job, because if I got laid off today, I mean, I would be stressed out naturally, but I would still have the ability to pay my bills and also have this nest egg that I know is going towards my potential retirement in the future. And I didn't think that I would have this at this age. I just started investing because I thought it would be fun when I was younger. And so I do think that when it comes to the fear of losing money, it's valid, as you mentioned. And it's likely that you will lose money at some point in time. However, if you remain consistent, and research shows anywhere you look with the average rate of returns in the market, that you are going to make money the longer you stay in the market. Yeah.
Well, I think your story is a testament to waiting it out, right? Like the longer you've been in it, the less affected you are by the swings. What's crazy is like now that you've been telling your story for so long, you've almost gone through a whole market cycle. Like you've seen it all. I mean, you saw the pandemic, you saw the high interest rates, and you're still here, right?
Exactly.
So yeah, I think it's just crazy. It's those first steps that you take. It's going to be the scariest because it's your first time, and those early swings, like it's going to be a little alarming, but as you wait it out, you're less affected by it. So,
exactly. And I'm curious, what is the biggest investing mistake that you've made?
Yeah.
I'm going to put you on the spot.
That's a great question. Personally for me, when there was all that hype about artificial intelligence, I was kind of a sucker personally, and I was like, okay, let me try to invest more into some technology. Yeah. The ETF that I chose didn't perform very well. And I was embarrassed too, because I was like, why is this happening to me? Just given my background, I should know better, right? But no, like it's going to happen. Doesn't matter how wealthy you are or what you invest in, it's going to happen. Yeah, and I think the mistake that you just mentioned that you made is one that I've made before, and it's one that I don't want to say everybody makes it, but going off of kind of like hype and what's trending because it's a very attractive opportunity in that moment is a mistake. I mean, I've made it more than once. And I mean, I've made it recently as well. And so I think one of the ways to avoid doing that is when you think about your strategy and why you want to invest in the first place. If you're investing for long-term wealth and you want to, I guess, track the average rate of return of the stock market, finding a mutual fund or an ETF that'll do that for you is a great strategy. Now, I know that we can't recommend investment products. I know that some of the funds that I personally invest in are QQQ and SPY, which help me track both the NASDAQ and then the S&P 500, which are two indexes within the stock market. So I know that, okay, cool. I've got those to help me track the overall stock market as a whole. And then outside of that, I also have the opportunity to be a bit more aggressive in other areas. And it's about like balance because I know that I have a ways to go before I aim to retire. So I have the flexibility to be more aggressive. Of course, if you are closer to your preferred retirement age, it would be wise to avoid being more aggressive because that, of course, grants you the potential to lose more money, which would not be optimal.
as you prepare to settle down. So that's been my approach to investing as of yet. I'm not going to argue that it's the right way or that it's a wrong way, because everybody's outlook and everybody's strategy is going to be different. Yeah. How have you approached investing personally and managed the risk of losing money? I know you mentioned mutual funds and ETFs, but I suppose how have you been approaching investing, and how has that developed over time?
Yeah, that's a great question. So in my personal approach, because of our age, I think it's great to be more aggressive if you can be. We have a long time horizon. If I'm putting money in my 401k, I know that's going to be there. And so whatever I'm doing on the side, I can afford to take a little bit more risk, right? I think there's a lot of educational pieces out there that explain how the younger you are, the more aggressive you can be because of that time horizon. This isn't just like an opinion, like this is like a known fact in the investing world.
Let's dive into myths and misconceptions about investing.
Yeah.
So we've talked already about the misconception, I suppose the fear of losing money in the market, which is valid. Now, one of the biggest misconceptions, and one that always gets me like all riled up, is that investing is gambling, or that investing is like gambling. I do think that there's attributes of investing, specifically trading, that are more akin to gambling. But when we think about what we've talked about, which is long-term investing, it is not gambling. And so I'm interested in your perspective on this misconception that investing is gambling, and also helping people understand how to avoid gambling as they approach this larger topic of investing.
I think where this is different than gambling is there's a lot of people out there who deeply think about their own strategies. They do the research and they diversify across the board. That helps eliminate a lot of risks that you might face if you were stock picking, right? Like you said, day trading, stock picking, the swings are going to be so high and low because that's just how the market works. Right. That's why people equate it to gambling, because some people might, pull their money out on a bad day.
Exactly.
Right. Instead of hanging tight, right?
I think you captured that well, because I've never heard it explained that way, but I do think that it makes sense in that it'll seem like gambling if you, and also with the less you do research, and the less you do research and the less knowledge you have about the topic of investing, the more it'll seem like gambling. Because if you are putting money into a product due to somebody else telling you to do so, and you have no knowledge of that, then with those swings, it's going to seem a lot scarier, because you know nothing about that product. You know nothing about what it holds. However, let's say on the opposite end, if you use a certain product, so let's say you go and get coffee every day, or you exercise and you use Lululemon products, or you have a favorite restaurant and it's a publicly traded company, and you feel like that company is going to be successful for the next 30 years, and you're 100% bought in. If you were to buy a share of that particular company, you're probably going to feel a lot more faith and conviction with your approach than you would if I were to sit here, which I never would, and tell you to invest in X company. Because then if that company goes down 20%, you're like, this is not what I signed up for. I'm going to sell this. And boom, now it seems like investing is this extremely risky thing that is akin to gambling. Yeah,
I think too, for those that are more risk adverse, just know knowledge is power.
Yes.
And invest with intention, right? You're intending to build a future for yourself by investing, so invest with intention as well. Like you need to mirror that philosophy through everything that you do, right?
Yeah.
And I think, to your point, buying stocks that you resonate with, that you use day to day, because people are using it.
Exactly.
And you see how great they are. We all love our Lulu, right? And so it's going to stick around.
I'm all about statistics and stats. And when it comes to gambling, one game that I've played before that I've enjoyed is blackjack. And blackjack has one of the higher odds of winning than any other casino game. I think there's about 4 that have similar rates, and that's about 4. I think it's like 44%. So you're creeping up on half the time you're going to win or make money. Now, the more you do it, and this is the same for any form of gambling, the more you do it, the less likely it is that you're going to win, and the more that creeps up to 0% chance of you winning. Now, when you look at investing, if you invest in the market, there was a graphic, let me pull it up on my phone real quick here, where if you invest for 15 years, the odds of you losing money in the market is 0.2%.
Yeah.
However, if you invest for 1 month, the odds of you losing money, 38%, which goes to everything that we've talked about long-term vision, and then kind of...
It's a little scary up front.
Exactly, and minimizing that risk, because this graphic shows over time, the longer you invest, that percentage of that odds of you losing money gets lower and lower and lower. An exercise that anybody can do is, right now, if you went to Google or if you go to Yahoo Finance and you type in a company, let's say Google, or you could even do Tesla, NVIDIA, anything, and you look at how that company, or how that stock rather, has performed over a day period or over a week period, and then you compare that to 1 year or 5 years or all time, you'll see just how drastic of a difference it is in return, whether it is positive or negative, about how that company has done over time, further emphasizing the importance of investing for the long term. So another myth that I would like to discuss is the idea that you need to be wealthy in order to get started with investing. I think that historically this might have been true. However, in present day, with all of the different brokerage firms where you can open an account for free, get started for free, where there's little to no fees, it has become increasingly more accessible, especially with applications that you can use on your phone or computer. If you were talking to your younger self, so I guess 18-year-old Lauren, because at 18 you can open up your own investment account. What would you say as far as if 18-year-old Lauren was, I don't think I have enough money to get started investing. I need to have $10,000. I need to have $100,000 to get started. What would you say?
I feel like in our world, like, we have the internet now, right? So that has set us up for this great opportunity to access things that, like you said, only the wealthy could access before. Right. So I would tell my younger self, Google how to start investing. I guarantee you, if you Google how do I start investing, it's going to populate a list of places to start, right? We're in this era of fintech, which has caused fee compression across the board. So because there's just this huge supply of ways to invest and people who want to invest, just the cost of everything has come down. And so this is a myth that only the wealthy can invest. Like, people of all walks of life can invest.
And to Lauren's point about how investing is not for the wealthy, not just for the wealthy, again, I started with $150. I have family members and I have friends that started with dollar amounts, and also in the ballpark of $100. However, if you go right now, as Lauren mentioned, and you hit the Googles and you're looking at how to get started with investing, or places where I can start to invest for free, you're going to see tons of different results where you can go and open up an account and you could fund that with 50 cents. You can fund the account with 50 cents. And then there are platforms out there where, even let's say you wanted to invest in a company where the share price, the price of an individual share is going to be $200 or it's $100. Some platforms allow you to buy fractional shares where you can invest what you have. You don't need that $200. You don't need that $100. I, to this day, will still buy fractional shares of some companies, which has helped me still grow my portfolio over time. And so it's really just a matter of getting started, because there are also, we didn't talk about dividends, but companies such as Microsoft pay dividends where for every share that you earn, you're going to get essentially a percentage of earnings from that company back, whether it's a quarterly basis or otherwise. And so for every share of Microsoft that I own, I don't remember what their dividend is, but I get money back. And you have the option of reinvesting dividends. And so over time, I have bought more shares of Microsoft with money given to me by Microsoft, if that makes any sense, because those dividends. So, for example, let's say it's 20% per share, or excuse me, if it 20 cents per share, and I own 5 shares, that's $1 if I'm doing my math correctly. And so I will get $1 in dividends for those 5 shares. And so you can think, as this scales and as you own more shares, the amount of dividends grows larger. And if you reinvest those dividends, over time, you're just buying more shares and your portfolio is growing larger and larger and larger. And you don't need a lot of money to get started doing that. And so I just wanted to, I guess, leave an anecdote as far as why it is a very big misconception that you need to be wealthy, or that you need a certain amount of money to get started with investing.
Yeah. And honestly, I think it's such an exciting time for our generation too.
Oh, yeah.
The internet is educating us, like people like yourselves. We have all these resources. We're having these conversations more than ever. I think it's awesome. Like, we have the runway to all be successful in this, right? So
I read before this that I think it was like 92% of Americans have access to the internet, or access the internet.
Yeah.
in 2023. And so that means that 92% of people in the US have the ability to Google how to get started with investing.
Yeah.
And so there is no reason to not have the information, because the information is there. As far as not getting started, there are tons of different reasons why it could be valid to not start investing immediately, whether it is that you need to build an emergency savings fund first, or there's other limiting factors. However, beginning to understand the importance of investing and also build a plan towards getting started with investing are two very big steps that anyone can take today.
Yeah, and I think, too, having more conversations with your friends.
Yeah.
Right? You know, it's funny because I saw this thing on TikTok, of all places. This lady was saying, you know, we don't teach financial literacy in school, which I know you're passionate about.
Yep.
Yet we also don't teach TikTok in school, and all these kids know how to use TikTok. How'd they learn? They download the app. They figured it out. They learned all the trends, all the algorithms, you know?
Yeah.
It's like it's the same thing with investing.
Yeah.
You take the time and learn.
That's a really good point. Yeah. I like that example.
Yeah.
When it comes to why women should start investing, there are several different reasons as to why this is crucial and why it's important. And I know that one of them is that women generally outlive men, of course. And there are other reasons as well. And so I was looking for what your thoughts are on why it is crucial and paramount that women begin to invest more.
Yeah, so I think, you know, your comment just now about how women tend to outlive men is like a huge reason for why I think, you know, people need to be more proactive, especially women, in learning about investing.
Right.
There's all these studies that show that, you know, once people enter a long-term relationship, there's usually one significant other that kind of takes reins of the finances and the investing.
Yeah.
And in heterosexual relationships, that often is the male in that relationship. If we are outliving our male counterparts, we're left with this loss of knowledge and understanding on what to do with like these remaining assets, right?
Yep.
And then we often rely on our future children, if we have any, to take care of that. When in reality, a lot of those widows could probably still function and do it on their own too. And maybe like donate to philanthropy or like give back to the community and find ways to still feel inspired with what they have left, right, in their last remaining years. You know, there's all these studies too about how women tend to think more long term.
Yeah.
Which I know you've probably seen, all those statistics about how, like Goldman Sachs published one about how all their female large cap managers outperform their male counterparts. It was by like 1.2% or so, but that's still a good amount.
It's been a long running stat. Women outperform men when it comes to investing.
Yeah, and I think it's just like the natural human tendencies. Like men just are very tend to be short-term thinking, proactive. No?
Yeah, no,
Should I not say that?
I don't disagree. I don't. Generally.
I know. You know, there's also these studies too that women tend to be more long-term thinking than our male counterparts. There also is that association with us being a little bit more risk adverse too.
Yep.
But I think that's not to a default. Like that's not something bad. I think it's a good skill to have.
Agreed.
Because you do have to be wary of what risks you are taking.
I think you've captured beautifully why it's important, really not only for women to start investing, but for everyone to start investing, and kind of like this idea of taking control of your own life.
Yeah, I think, you know, while we have these conversations trying to educate women on how to invest, in the back of our minds, we're like, okay, like we need to show if males can do this, we can do it too. But I think it's more so about us taking charge of our own lives, because we're a very, you know, independent generation as a whole.
Right.
And so by investing, you're just creating a beautiful future for yourself. You're not trying to match numbers or say, I can have this skill. It's more so about taking ownership of your life and setting the tone for what you want out of it.
Yeah, so I guess less focus on trying to fill up this gap, but more focus on like how can I better myself and make sure that I'm securing a financial future for myself and anybody that I care about.
Yeah, exactly.
I love it. Awesome. Well, thank you for joining me here today to talk about investing, which is one of my favorite topics, and also specifically women investing and the importance of women getting started with investing. I guess, do you have any final thoughts before I wrap it up?
No, I think this was really good. And I appreciate you having someone like me on the show.
Perfect. Of course. And for those of you listening, hopefully you gained some new knowledge on the importance of investing or ways that you can get started as we reflected on our own personal journeys. And thanks again for tuning in to this episode of the Is It in the Budget podcast. If you're looking to listen to other episodes, you can find the podcast on Spotify or Apple Podcasts or on my website, College Money Habits. If you would like to hear more episodes like this, please let me know because I'm always looking to have more guests on the show, and also diversity of thought is important. I think bringing in new perspectives is important as well. So let me know how you liked this episode, and if you did in fact learn something new, or if this is the episode that got you to start investing in the stock market. And with that, remember that when it comes to making any financial decision, whether it is to purchase a home, purchase a car, open a new account of any sort, or the decision to start investing, make sure to always ask yourself, is it in the budget? Thank you.